which Wall Street would prefer to expire worthless. So this week doesn't really looks neutral, I guess you would say, for Apple. We'll leave it there. Let's move over to the indices where things are getting exciting. We've got the Russell 2000. We've talked about the giant channel 2021. So far, you might as well have called it a wipe-off year for the Russell 2000. If you invested in this index, it sucked. Plain and simple, it sucked. It didn't do much, and you can see 2021 starts, kind of gets stuck into a big range, and then now we're finally closing out. We talked about this as a community. I still think there's a lot of strength here. Usually people take the distance of the channel, that becomes A, and then they extrapolate that out, it becomes B, and it hits that kind of 258, 260 zone. So that becomes a target during a seasonally strong time. We've already detailed October, November, and December tend to be very strong for the Russell. The smaller caps tend to get a lot of buying pressure into them, and that's a good seasonal event. And then we've got to ask ourselves the question, well, what's happening with S&P 500? What's happening with the NASDAQ? Well, they seem to be declining slightly, and that will push the Russell down. So we've got really a 50 exponential at the previous resistance here, and we've got a 20 exponential, the red line, at right on these resistances. So we've drawn a box here. And what I'm thinking is if the market continues to weaken, let's say it comes back down, this area here and this area here should be met by technical buyer demand. And that could be strong levels for you to day trade, scalp, look at, and then of course make your own decisions on. So these will be zones to watch. That 234, certainly a pivotal area for the Russell this week. Let's move over to the NASDAQ. We've got this one trapped very well as a community. I call these the community trend lines, the top and the bottom. You guys found them together with me. That's fantastic. We've done it. We've got this one, and we've been very, very accurate with using this, with using the breakout above, with using it as a resistance. It's all kind of playing the game. Now we ask ourselves the question, well, the rally on Friday, was that the real deal, or was it just a standard 2 steps down, 1 step up, 2 steps down? I'm still tending towards the 2 steps up, 2 steps down kind of thing, in terms of 2 steps down, 1 step up, I mean. And the reason why is because we usually do go and try to hit these 20 moving averages and 50 moving averages, especially after such a huge rally. While we're getting close to Thanksgiving, and I do understand that is traditionally a very strong week, we've still got this kind of limbo week here. The 12th of November, Seasonax said that was the bottom. That was kind of the low point from a statistical standpoint, but that's only stats. What we're looking at here is the TA. The TA hit the resistance, it's pulled back, it's had a bit of a rally. Do we now see that further weakness? I think the S&P 500 shows it a little bit better, but let's take a look on the 2 hour. So the 2 hour certainly doesn't look that weak. I mean, it's had a little bit of rally here, but we're at that 16.2 zone. And I think, again, when you come into the NASDAQ, sometimes it shows us great technicals, but the SPY or the S&P 500 can be the better index to find the overall market strength. I mean, this is 500 companies. It's not just the tech side. It shows us the overall market strength. Community trend line, again, hit, perfect hit, long leg doji, weakness ensued. 20 moving average at the 460, and around that 450 is where that 40, that 50 moving average is going to be. So it's right around that zone. So what if we have a scenario where it goes like this? Bit of bounce, hits the bottom, sells off, hits that. Imagine if we did this even just next week. That's very possible, and then we move back. We're still bullish into the back of the year. We still are seeing a lot of positive signs. People are super concerned about inflation. I understand, but that might be something that happens in 4 or 5 years in terms of becomes a super out of control problem. We've got to look at the now and think about what's the price action telling us, and is there real weakness here in the market? And when you go and take a look at the weekly, does that look like a market to you that's like, wow, this thing's going to crash? Not just yet. I mean, I'm not seeing crash signs here. I'm just not seeing that weakness. We've pulled back to the 20s so many times. We've bounced off that. You know, here we had the buy. Here we had the buy, 20, 20, 20. It's unlikely in a very strong seasonal period such as November, December to see these crashes. It's happened before. Of course, anything can happen, but it's unlikely. Let's take a look at the options to see if they can give us a bit of an idea. 440 strike. This is where we have the most amount of puts sitting, and a lot of kind of calls. The green one here is calls, and puts floating all above that. So what this really tells us is when we're looking at the SPY, 440, let's say it does sell off this week, there should be buying demand around 440. All these puts are very unlikely to make any money this week. They're very unlikely. There's too many puts in the market. Look at all the puts here expiring. But we have that put wall sitting around that 440. So if we go back over to the SPY and we think, okay, where's the 440? And we put that in. It's super unlikely to come down here, yeah? No way it's getting down to that level. You would think not. But that is that previous kind of resistance support. So there's a lot of puts floating all around this area. And I think that kind of opens up this idea that the market could easily fall to these zones, but it's very unlikely this week, next week. The 440 continues to be a thing through the weeks that it could get underneath that zone. Let's take a look at the SPX and try to make sense of it here. So this is still the S&P 500, but obviously not the ETF version. We hit the R1, fantastic. The R1 and the trend line together, that gave us that weakness signal. What usually happens with markets though is they do like to come and touch our little blue line here. And the blue line is the pivots, the central pivots. These are the monthly ones. See how it likes to touch them? It loves the central pivot. It comes back and says, you know what, when we dip, we love the central pivot area. We're going to come in there. We're going to get that during the month, and then we're going to bounce off that area. Well, the central pivot's quite far behind. In fact, look at this. Where the 50 would be, where the previous resistance would be, is where that central pivot starts. So this is a zone that makes so much sense to me. The 20 is already a fantastic zone. It just makes sense to get back down here. And you might say, well, you're talking bearish here, Tom. I'm not talking very much bearish. I just think it makes sense. If it keeps running away too fast, it's very bad technically. And that's what we don't want to see in the market. So I quite like what we're having here. We've got that central pivot. We've got the idea of the resistance. At this stage, we're looking a little bit weaker than positive, but that doesn't mean that investors should be scared or anything like that. There's no signs on the weekly or anything to show it yet. It's just been strong price action and more weakness towards little dips or small pullbacks into what makes sense traditionally through every single normal month in the markets. Let's move over to the crypto markets before we do the news for the week ahead. We've got here, of course, Bitcoin floating off that previous resistance high, has become support. We've seen plenty of buying happening around the 64K zone. Any closure underneath 64K and this 20 moving average on the daily will be a big deal towards the bears. They've probably got control of the market then, and you may see that kind of seasonal 20-30% crash pull back on Bitcoin. That really could be the trigger. Look how often this has been a buy zone in recent kind of weeks. And if that doesn't happen and it keeps buying off this and we get a new high, well, you better watch out because 70K is coming. And I think 75, 78, we've got some serious potential here in Bitcoin for the end of the year. A lot of people are calling 100,000 plus. I don't technically disagree with them. I think it's actually very possible. We've had Ethereum moving up very strongly here. We can see the trend line, but even this one is starting to weaken a little bit. Look at this price action. Does that look like the price action of super strength anymore? Every other time, create a little bit of a flag, bam, let's go. Create a downtrend, bam, let's go. This time round, what are we doing? We're making a series of lower peaks. We're kind of like in a little symmetrical here, waiting for the next decision. So I think we'll get that over the next 24 hours and we'll find out whether this crypto market wants to go more bullish or whether this thing wants to have a little bit of a pullback before hopefully what's going to be a fantastic year end. News ahead, not that much. This week's pretty good. Tuesday, 8:30 a.m. ET, so obviously New York time. We've got retail sales and core retail sales. Then we've got a bunch of news coming out of some other countries. And in general, the market will be left to its earnings. It'll be left to, obviously, whatever's going on with the government stuff and just nothing really else. I mean, we're going to see the technicals play out this week. And I'm excited ahead of what's going to be an interesting one. Then we've got the big Thanksgiving weeks coming up, a very bullish period of time for the markets traditionally. And it will be great. If you enjoyed the video, please remember to subscribe, smash that like button, guys. And again, thank you so much for getting us to 70,000. You guys rock, and it's because of you we got here. Thanks so much.